This is David Patrick, Fitzstock Charts market video update for January 23rd, 2019. We're in a 12-day uptrend, and things are getting a little bit choppy, a little bit dicey, and that requires patience and discipline. We talked yesterday about 2650. We'll talk a little bit more about that, and I'll show you on the charts why it was relevant on Tuesday and why it was relevant today. Talk about the Globex lows. After we blew through the stops above 2650 today, I posted, broke the uptrend line. We're heading to Globex lows. We'll look at that also. We'll relook at 1953, our historical chart pattern comparison that we've been looking at. It's our roadmap. In the bottom, I know you probably can't see here with the video, but patience and discipline are the essentials, two of the most important essentials to trading success. It is the most difficult thing to sit on your hands. It's the most difficult thing to stop a trade out with a loss. But if you continue to bet over 750, where 75% of your trades are winning trades, you have to do the right thing when a trade turns sour. And that's going to happen. Our 90% club continues to grow. We have over 965 different options that are up over 90%. Some are up 600%. We have 25 of these January and February contracts for 2019, 4 triplers of those. And this will continue to grow in uptrends. The question is how long will this uptrend last? So let's get into that in a moment here. Before we get into the 2650 area and the 5-minute rules of engagement, I did post this historical chart pattern comparison when you click on HCPC on the website. Let me scroll down, current subscriber access, and this is our latest, and I'll update this. And if we diverge, by the way, all of our patterns that repeat themselves also diverge, which means we can't continue with the exact same pattern forever. Eventually they will diverge. Sometimes we're able to capitalize on these patterns for days, weeks, months. I've said over and over again, the panic in 1907 compared to 2007, 2008 market crash was almost identical for 18 months. So how long this pattern lasts, we don't know. But when we blow it up a little bit here, you can see we saw a death cross in 1953. And by the way, nobody's looking at this. Nobody looked at 1994 last year. Nobody looked at 2008 for the huge bounce we saw this year. And nobody's looking at 1953 right now. We are, though. And that's the most important thing. You don't want everybody looking at the same thing. We're looking at this. And right now, it's spot on. Death cross 1953. Death cross 2019. Did somewhat of a V bottom. Broke the 58. Hit all those stops. All these people that are in long or short the market will put trail stops. They're going to put the trail stops to 50-day. We broke above it. Back in 1953, we came back and knocked ourselves out of trend, only to reset up very nicely for another bounce up. Now, whether we continue on this page, on this analog or not, going forward, who knows? But right now, this is where we're at. This is where we're at. MACD at new highs, MACD was at new highs. We broke trend. Are we predicting us to break trend? We're not predicting anything. We're saying that these patterns repeat themselves, and we've been able to capitalize. When we go back to this website and we scroll back and look at some of these patterns, this was 1998, 2019. Let me see here. We had panic to the here's 1994. We were looking at this one compared to the Russell 2000, and this was an identical roadmap that we followed that we were able to capitalize on. And even when you go to the website and when you scroll down and you look at this Apple post, this was back when we launched the service. All this happened with historical chart pattern comparisons and patterns that repeat themselves. And we didn't have to pick the bottom in Apple, but when we saw WV, we did scans of thousands of charts and thousands of indexes that have done WV patterns before. And we were able to get long at different entry levels all the way up with Apple. And, you know, when we look at these historical chart pattern comparisons, it's the same thing. You know, we scroll through these and we've been able to identify, you know, 1995, there's IBM to NVIDIA. When we first launched the service, it was the XLF compared to 2000. So we're always going to have a pattern that we're looking at to try to get a trading edge. And right now it's 1953 and it will diverge. It's just a matter of time. So let's get right into the market. Let's change a few things here. And let's talk about S&P 500 futures and what's going on here. Let me change this. There we go. And by the way, this market's in meltdown mode. And that's exactly what we just showed. The market broke the 10 SMA in 1953 and we went lower. We got knocked out of trend. And that's why some people have been asking me, when are you looking to add? You're only 10% long. I was 40% long exposure last week. I'm not looking to add. We are below, before we get into this, we are below a death cross. Okay? That is not bullish. This death cross is not bullish. So if I'm long from here and I got 40% long exposure, I'm scaling up here. I'm never going to get that top. But I got knocked out of some of mine up here. So why? I'm not going to buy this 10 SMA. And here's something you have to understand. You would buy this 10 SMA if we were above the 10, the 50, and the 200. All right? Maybe somewhere in here where we kept going higher. This is not the time to buy the 10 SMA. Now, whether we bounce here or not, it's not how you trade. You trade, you get long early in this uptrend, right in here, where we did, and you scale on the way up, and you wait. Now that we're in, what is this, 13? I think we're going 12 or 13 days, long in the tooth. So your risk reward is not equivalent to what it was back here. So I'm not adding long risk exposure here. And I somewhat expect this thing to break, and we'll start talking about Fibonacci retracements from these lows to where we were. And I think bare minimum we're coming back down to 25.40. And that's not a prediction. That's just price action suggesting what the probabilities are. All right. So let's get back into our rules of engagement. Our rules of engagement are you use the 10 SMA with the MACD, right? You can dissect these charts all you want. I think this is yesterday. Let me make sure I have a 2-day chart here. A time frame. Let's go back 2 days. So, yeah, let's see here. Tuesday. So let's talk about yesterday, first of all, before we talk about today. So we came in yesterday. This would be Tuesday. Let's blow these charts up a little bit. All right, sorry about that. So I'm going to draw this. You see all these closes? 26.50. Try to draw this the best I can so we can see. All right, so 9:30, let's see. Okay, so the market opens in here, 9:30. And I started posting on Twitter. I said, obviously we know we have rules of engagement above the 10 SMA to be long and vice versa for short. We came in here and I said, wait till you're above 26.50. And then I elaborated on that and said, I want a close above 26.50 because I felt 26.50 was critical support and it could be resistance. I want to see us close back above that before I have more conviction we're going higher. I felt 26.50 was pretty significant. Well, obviously we couldn't close there. We failed and we went lower. We went lower and we went lower. And so that was great. And we came in and futures started going up in the morning. And you had a feeling on Wednesday that it was the exact opposite of Tuesday, where at least the first half of the day the bulls were going to win because the bears won the entire day on Tuesday. So we started getting a feeling here in the morning. I woke up and see futures are up, and I'm like, wow, we're up 12 handles or whatever. I have a feeling now we couldn't get through 26.50 on Tuesday. What's going to happen is now all these stop orders start lining up there because we couldn't break that yesterday, and all the robots, all the algos, all the black boxes, all the hedge funds, all the whatever, all the traders are lined up here now. I'm just telling you, That's the feeling I get for 20 plus years trading in the stock market. Because I just have a feeling when I see support and resistance, I'm not the only one that sees that. So with that said, I came in this on Wednesday and I said, listen, I think we're going to blow through 2650. 2650 to 2660 would probably be my target for the upside. Well, that's exactly what happened. They blew these stops out. All right. So we had some really nice trades on Wednesday. Let's see here. Draw some trend lines. Most of you aren't up during Globex when the market's trading in the AM session, so we're trying to get to where the market's getting close to open. So you break a downtrend line, you go higher, and I like to draw these 10 bars or more. You can draw them tighter if you want. But that was the trade. That was the trade of the day right there, was a counter trend short. Counter trend shorts are very difficult. Okay, so let's go back and look. We're looking at MACD over here on the right. Let's see if I can point this out. That MACD is lower than this MACD. Not by much. And all three of these are lower than this one. So you have a lower high, but on an intraday, these new highs came with MACD. You could say a double topping or not quite as high, which is bearish divergence. We talked about this the other day, that if you're going to counter trend trade, wait for bearish divergence with price. So we have our bearish divergence. We have a break of an uptrend line, MACD bear cross, and we have our bearish 1953 historical chart pattern comparisons. But we're in a daily uptrend, so it is a counter trend trade short. Did I personally take that? I've been day trading for the last how many years? So I'm taking all of these. There's a lot of them I don't take in Globex. I'm not up. But I do know if you're long, you definitely at least get stopped out there. So let's get back to after that happened. What did I say? After we broke the uptrend, and I said, listen, our next bogey's up here at 2660. Don't fall in love with the upside. Respect the fact that we just broke an uptrend line and we have rules to engagement short. And I also said that watch out, because our Globex lows now are our bear target on the downside. Well, the S&P futures trade all night long, and these were the Globex lows, right? 3 in the morning, Eastern. So that was the magnet for the downside. Bearish divergence came, new highs without MACD at new highs, break an uptrend line. This is a counter trend trade because we are in an uptrend on the daily, so it's more difficult, but it paid. It paid. It paid because you had a lot of things working for you. You had new highs without MACD. You had a break of an uptrend line. We had a 1953 historical chart pattern comparison, and you came in Globex lows were, way down there. And there's a good chance every day that we test Globex highs and lows when the regular trading session starts. So you had a lot of things suggesting that these was going to be our target. Now, where do we go from here? Well, we already know that historical chart pattern comparison to 1953, right in here, says that we could break trend. And if you did Fibonacci retracements, it's at least 38, probably close to 50%. Now, are we going to get that kind of retracement? That's a pretty big retracement. I don't know. But when I drew these, this is the ES, 38.2, I think we easily get. That's 2540. Why can't we get to 2540? That can happen tomorrow. And it might even happen today. So just be careful. We know we're long. When this uptrend started, we have great prices, right? We drew a downtrend line here. And we got long right here. By the way, this uptrend right here, this first one of the year, January 4th, did not work. We got knocked out of trend. The second one paid extra fat. Extra fat. So if you lost 30 handles to make 100 plus, I think you made some money. And we had a lot of stocks in the 90% club on the long side on the way up. So my take on the market is, yes, we are still in an uptrend. We're right at the 10 SMA. I'm not going to predict we're going to break it. If we do break it and get knocked out of trend, I think we're at least coming to this Fibonacci retracement of 2540. So that's my if you want to call it a prediction, my forecast of where I think things can go if we get taken out of trend. All right, so that's enough of that. Let's get right into the daily charts and talk about stocks and where we are. So we're right at the 10 SMA. We talked about this was our mini bull cross or our mini golden cross, 10s to 50. And a lot of times when that happens, you come down here and test it, and many times you come and break it. So what's the NASDAQ doing? NASDAQ, same thing. We're right at the 50 SMA, and MACD's curling lower. So Russell 2000 doing same thing. What are financials doing? They're stronger than the rest. They're not even touching either one of them. What's the transports doing? They're broken. They came down hard. They broke the 10 SMA. They puked. The 10 is not even close to the 50, so they're probably one of the weakest sectors if we're looking for relative weakness out there. IBB, which was relatively strong, is getting knocked out of trend today, and we have to watch for that because that was a leading sector on the way up. And is it going to lead on the way down? We don't know. We have a witch at bottom here on the energy sector, and we're breaking trend. So we can easily come back to 58 bucks here. And we look at oil futures. That was ETF we just looked at. They're getting knocked out of trend on the uptrend here also. And they can come back down to below 50 pretty easy. So these are the things we have to watch for. Let's look at, if we look at the Dow Jones, very strong, not even close to the 10 SMA. And I tell you what, if the S&P does do that 38.2% retrace, I think the industrials are going to be the place to pour money into on the way back up. That's my personal opinion. We'll keep an eye on that thesis. We'll look at TLT, the bonds. They broke an uptrend line. They paid. They're trying to go back into an uptrend. MACD's still heading lower, so you don't have your rules to engage long. We have to wait to see if that's going to pan out or not. Do we look at this gold? Oops, GLD. Broken uptrend line, bear flagging below. I don't like this trade right here. I would leave it alone. Let's fly into tech stocks and see what's going on. So, to me, this looks a lot like, let's see if I can pull it up here. Oh, there's Apple on the left. Let's see if I can pull up Apple. Let's see, go back to 2007, 2008. This is 2008 Apple. You can see this death cross happened a long time. And this bottoming process that took place in 09, 08, 09, you could see the stock didn't move anywhere for a long time. And when it did break above that 50 SMA for the first time, it ended up being a trap because we had to come down and create a double bottom. So I personally think these 142 lows we're going to at some point in the first quarter. We'll see if that happens. Do we test the 50 SMA before we go there? I don't know. I don't like the way this chart looks in the long term. Long term meaning that, the first quarter of this year. Can you still trade it long and short? Absolutely. But it still looks very bearish to me going into this first quarter. Let's flip to Google. It's getting very sloppy here. 50 is below the 200. We're sandwiched between all that stuff. It's not where we make our money. We make our money when things are trending higher, prices above the 50, above the 200, above the 10 SMA, both flagging and breaking uptrend lines. That's not happening. That's why you have to be patient and disciplined. Netflix got knocked out of the uptrend here, is engaging short. Looks like a retracement's coming on Netflix. Booking, very sloppy. Expedia, sloppy. There's not a lot of trend. There's not a lot of going on there. Tesla, short. This looks like it wants to pay. It looks like it wants to retest at least 50% retracements, if not lower, retest those old lows. That does not look good with Tesla. Roku, maybe elongated bull flag. We really need to get back above 44 for me to get interested in that one. We'll keep an eye on it. NVIDIA. This one engaged long back here. We don't add up here. We have moving averages, big ones, the 250 moving lower. It's not the time to add. It's the time to scale and wait and be patient, be disciplined. Believe me, it'll pay. Intel, nothing going on there. Micron, Texas Instruments, IBM, It's a gap higher, and we got to really wait to see if there's going to be price strength confirmation. That one's been a dinosaur forever, and maybe it's starting to finally wake up. Avgo. Still looks promising on Avgo. It's very slow moving. OLED, nothing going on. Light. I don't see too much going on. Go to the software stocks. Microsoft, Oracle. Yeah, they're really starting to slow down. Adobe, slowing down. Let's go to Splunk. Yeah, and these are some big leaders. Pivotal, Coop. Coop still looks good. That's a bull flag. That still looks like it wants much higher. So that's probably the strongest one of them. CRM, Jobs, and Workday. Let's see what they look like. I don't see anything new there. Workday, new highs. That one and Coop, probably two of the strongest stocks right now, if I had to go long some names here. Team, that's a double top, nasty reversal. This one could develop into a cup and handle pattern. So we have to keep an eye on that. If it goes back into an uptrend at some point late January or early February, this one could really set up. We're going to keep an eye on that one. FF5V, grinding lower. We already talked about Google and Facebook. Snap, I don't think too much going on. Twitter's breaking an uptrend line. That one looks like it's setting up short. China stocks, Baba, Baidu, they all look like they're starting to give a lot back. And if anything, they're setting up short, so be careful there. Wuba looks like it wants 52 close and then some. GoDaddy, Wix, really starting to die out. PayPal, MasterCard, Visa. Let's look at the banks. Sorry about the lengthy video here. JP Morgan, Citigroup. They just look like they've come a long way. This Bank of America does look really good. It's a bull flag above a 200 SMA. And I tell you what, that's another stock. If we get knocked out of trend and go back into an uptrend, we're looking for these stocks that are the strongest on the way back up, relative strength 101. That's what we're going to look at. We're going to look at the Coops, look at the Bank of Americas, look at some of these other stocks that we're showing relative strength. But right now, things are slowing down. CBOE, CME, ICE. CME looks good, break of a downtrend line. And that one could be setting up for the fourth or fifth stock if we go back to an uptrend after getting knocked out of trend. Let's see. Is anything setting up long? No. And not in the oil sector. I think these are all setting up short to at least give some of this retracement back. And if anything, the XLE, I think, is going back to 57.5 area, maybe 58. So I think those are setting up short. Let's fly through the biotechs. Any kind of leadership here? I don't see it. We'll scan through these. REGN was a big leader, and that's, after hitting a 52-week high, just pukes itself. And that was showing some relative strength. Do we look at ISRG? Yes, I don't see too much setting up there. What about the casinos? Grinding to nowhere, really. So I don't see a whole lot setting up there. X-ray, ALGN, bull flag above the 50 SMA, and that's a decent setup. So let's get back to the rest of the market and see what's going on here. We are bouncing as of right now, a little past noon Eastern Wednesday on 123.19. Right at this mini golden cross. 50 wants to go through, the 10 wants to go through the 50 on the way up. We're not going to predict that we come down here. We're going to wait. Do we get knocked out of trend? It's early. If we get knocked out of trend, we already know we're expecting to go to 25.40. If we don't get knocked out of trend, we just patiently wait. I'm not adding at the 10 SMA because we're still below the 200 SMA. I would add long risk exposure up here with an anticipation of getting up here. Or I'll add if we get to 25.40 and let's say we break a downtrend line, I'll look to add. So I remain with a low percentage long, 10% long. I was 40% long in here, and up in here I was 130% long. When we broke trend right there, broke this uptrend line, we all know I went all cash. Let me see if I can draw that trend line. Very simple. And then we saw the mini death cross, 10 through the 50. And we all know what happened after that. And then there's the death cross. So we're not going to make predictions. We're going to use rules of engagement. We know 5-minute rules of engagement work. Continue to print money on the ES using 5-minute rules of engagement. The daily is getting very sloppy. We're long in the tooth with this uptrend. That doesn't mean we have to get knocked out of trend. It means we need patience. We need to see, is this minor support going to hold, and are we going to go higher? Or are we going to fail, get knocked out of trend, and come back to these Fibonacci retracements? We're not going to predict. We're going to react. Let's see what happens. That's all I have for the market video update. Have a great day.